Tuesday, September 11th, 2018. Monaco 64, home of alternative economics and contrarian views. I'd like to talk about barter today. And why is that important? Well, I think there's a small probability that if there is a total meltdown of our monetary system, that we could end up having to barter. And why do I think that? I'm not trying to scaremonger. I'm just trying to look at different scenarios. We've been on a track to fiat money since the Federal Reserve was created, or you could argue since the Bank of England was created in 1694. Even the founder of the Bank of England said that they could create money out of thin air. And I think in the last 50 years, it's it's gone on steroids, and I think it's unsustainable, and it's one of the reasons why they still, the BIS, Bank for International Settlements, still has a list of SIFI, SIFI, significantly important financial institutions. These are institutions that are, banks that are protected by the BIS. I mean, you have the case of HSBC a few years ago. They acted criminally by laundering money for drug cartel, and they got nothing. They just got a slap on the hand, and that was because of the BIS. And I did a video about that. I'll put the up in the cards and the link below about that story, how the BIS came and actually stopped the Department of Justice from prosecuting them criminally. And so it makes you wonder if the system is so safe, why there is a SIFI. They're even talking about, how can I say, including other institutions like fund managers, asset managers into SIFI. So I will talk a little more about this after I look at the markets. As usual, it's 8:05 a.m. And I also like to talk about the narrow bank and a few other things about inequality that we have today. So it'll be a little more, a few more subjects this morning. So 8:05 a.m. London, spot gold 11.96. It's up 33 cents. So still stuck here, gold below 1200. It's 11.93 has been the low and 11.97 the high. Very narrow range. Silver 14.20, up 3 cents. The Dow is up 38, 25,902. S&P is up 4.5 points, 28.82, and the Nasdaq 100 future is up 22 at 74.72. Yesterday, we saw a big move in the pound because of Brexit news. So the pound is continuing to go higher this morning. It's up 23 pips or 0.2% at 130.50. Euro is at 116.25. That's up 0.25%. But the dollar is up against the yen, almost 1/3%. So that's kind of cushioning the dollar index at the moment. It's trading around 95. So dollar index, you can see here this chart. It looks like it's forming a head and shoulder formation though. What else? Dollar yuan 686 unchanged, and WTI crude is at 50. So not much going on there. Emerging market currencies not moving that much either. Let's have a look at the 10-year yield. US 10-year yield is at 2.95, so it's creeping up. I saw the Italian yield yesterday. During the day, it came off quite a lot. It's come off quite a bit actually. It closed above 3% last week. It's now at 2.87. So I haven't seen the news there. I will look at it, but it seems to be, things calming down for now in Italy. So barter, why am I talking about barter? Well, because if you look at the Austrian school regression theory analysis of money started because of barter. And money was an instrument or a tool that helped indirect exchange. And it's what's helped modernize our economy in the last 200 years. It's helped people specialize, create new technologies, industry, and our modern economy is based on indirect exchange, and it needs sound money. Well, even though we haven't had it for a long time, the vestiges of sound money have continued to help our modern specialized economy. But it is my opinion, and the opinion of many others, even Lord Rothschild or Jacob Rothschild said a few months ago, or last year, I'm not sure exactly when, that the central banks are carrying out an experiment that has never been carried out before. And what's the experiment? Well, it's manipulating everything. Asset prices, it's manipulating interest rates, it's printing money out of thin air, ballooning their balance sheets into the trillions. And it's just basically, the financial market should reflect the reality of the real economy, but it's not. It's becoming a reality into itself. It's like a virtual reality. Basically, it's the tail wagging the dog. The dog should be the economy, and the financial market should be the tail, but it's going backwards now, or ass backwards, if you want to call it. So I want to talk about, and I want to thank Keith Weiner, and I'll put his article below in the description. It's on Silver Doctors. He says the financial system will collapse. The only way out of the collapse is with gold. And I'll go quickly through this story, and I also put another link from the Wall Street Journal where they talk about this bank. It's called the Narrow Bank USA, or TNB. And Wall Street Journal says bank sues New York Fed over lack of account. So basically, James McAndrews, who actually worked for the New York Fed, he wants to, he runs this bank called the Narrow Bank. And what the Narrow Bank wants to do is have an account with the New York Fed. What the New York Fed has is an account for excess reserves for their members. And what they do is that the Federal Reserve, they need these banks to put money with them so that they can finance the huge balance sheet, right? The $4 trillion that they've done through QE. So the banks, they attract the banks by giving them a high interest rate, which is almost 2% right now, and they can finance their balance sheet with that. And it becomes a liability of the Fed, of course. It becomes an asset of the banks that put those reserves there. And then these banks, that's what they do. They just leave it there, and they earn, they are the SIFI banks. They are the connected banks, the JP Morgan, the Goldman Sachs. But here you have an upstart, James McAndrews of the TNB USA. And what he wants to do is open this bank to just do that. He's not going to be involved in derivatives or anything. The only function of this bank is to take people's deposits, whoever, give him like 1.5%, which is a lot higher than almost zero right now, and then put it with the Fed in their excess reserve account and earn 2%. So make 50 basis points. So why did the Fed, that would be good for the Fed, you might think. They can finance their balance sheet. But no, what's happened is that this could drive a lot of people, a lot of savers, investors to flood, this TNB bank, because they're offering, 1.5 instead of 0.08% or just 8 basis points. He's giving them 1.5, and it's very safe. It's with the Fed. So what that would do, it would drive all the capital out of the economy into the Fed. And I think that just goes to show how fraudulent our system is. It's not based on creating wealth. It's based on destroying wealth, sucking the wealth. And that's what the TNB Bank proves. I highly recommend you read Keith Winner's article. You might have to read it more than once to understand it, but highly recommend it. What about inequality? Well, I was just doing a little bit of analysis last night about, because I think, you know, we live, on the whole, we're a lot better off, even the average person, than our great-grandparents or great-great-grandparents were during Victorian times. I mean, we live better off than kings did, you know, 500 years ago. But the problem now, I think, is the inequality. And of course, it's been driven by this fiat money system controlled by the financial establishment and the politicians. And I was looking yesterday at some numbers. For example, during Victorian times, the Bank of England governor had a annual wage of £400. And an Anglican parson or vicar had one of £140. So the Bank of England governor, he earned 2.85 times more than a vicar. But nowadays, Mr. Carney of ex-Goldman Sachs, he's earning £880,000. And the vicar in 2015 was earning 20,000. So I've been a little bit more generous, and I say, let's say the vicar earns 25,000. So the vicar now, you know, the Bank of England governor now is earning 35 times more than a vicar. Is that really justified? And I was looking at engineers. Engineers used to earn £110 per annum, Victorian times. So they used to, you know, Bank of England governor used to earn 3.63 times more. Today, the average pay of an engineer is 40,000. So the Bank of England governor is earning 22 times more than an engineer. And I've taken account that some top engineers earn 110,000. So Bank of England governor would earn 8 times. But you get the idea. As the economy, fiat money economy, becomes more and more unhinged, jobs that perpetuate that system become better and better paid. Jobs that are to do more with reality and the real economy don't benefit, and you can see by those numbers. And that's one of the things I wanted to talk about. So if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. You can also follow me on Steemit, DTube, and on Twitter. I'd like to thank everyone who have contributed to the channel with donations through Patreon or PayPal or any other fashion. There's links below in the description if you'd like to donate. Thanks a lot. Take care. Have a great day, and I'll talk to you later. Bye.